This could be huge in the next, uh, week or so. He keeps saying, oh, the US is really hot. The economy is really hot. I think it's hot air. Even the World Gold Council said that 75% of the central banks they surveyed say they're going to keep buying gold in the next 5 years. We don't really know who Satoshi Nakamoto is. And for me, that's a problem. But I still think we're going to go to at least 1 to 1. And then I think it would be a good time to take some of your gold and exchange it for investments.
Okay, ladies and gentlemen, so today we have Mario Innecco on our show, and today we will look at the US economy, we will talk about precious metal sector and its recent sharp moves, commodity sector, and many other very interesting topics. So Mario, thank you so much for being on the show.
You're welcome, Vladislav. It's nice speaking with you.
Thank you so much, sir. So very busy times in the precious metal sector with the economy and everything, but I would like to start with the big macro picture. So what's your take on what's happening with the US economy and what would be some of the things that you are paying attention to right now?
Yeah, there's quite a few things going on. I guess the first one, the big one, since the Trump administration has come into power, is the trade wars. I guess the tariff wars. I think it's still really uncertain what's gonna pan out for the U.S. economy and for the world in general. So it's a big question mark. We've got a deadline for an agreement with China, November 1st. Trump said, I think, recently that he would impose a 155% tariff on China if they didn't come to an agreement. So this could be huge in the next, uh, week or so. The other thing that is going on is the statistics. I think right now, the BLS is not publishing anything because the federal government is shut down. But prior to that, they revised the non-farm payroll data by 911,000 lower from March last year to March this year, and they did a similar revision the year before. So I think the U.S. economy is not doing as well as, for example, the Trump administration is saying it is. He keeps saying, oh, the US is really hot. The economy is really hot. I think it's hot air. But one thing, though, that I've learned recently, and it's something I don't look too much into, is AI. And apparently, in the uh, second quarter GDP in the US, half of GDP growth was AI data centers. So definitely there is something going on there. And it's probably one of the reasons why the US economy is doing so much better than the other economies. And I also think they're still spending a lot of government deficit spending is still going on. The big beautiful bill is going to make sure that the budget deficit in the US is going to remain around 6% for the next few years. So yeah, when you inject so much debt into the system and credit, the economy will look like it's growing. So that's how I see the US economy right now.
Right, and I would just love to hear your take on the stock market valuations in US. So of course, the market is very segregated. Some parts are doing extremely well, like AI, others aren't. But what's your macro view on the current valuations, let's say, of the whole S&P 500?
Well, if you, like you said, you strip out the sectors, it's mainly technology that's driving everything. But the other thing I would say, we are in in an unprecedented monetary age, I think, and measuring value in the stock market and other, let's say, investment places is really difficult because it's like saying I'm going to measure value versus confetti or something. So I think that's why I always go back to gold and silver. If you measure value in terms of gold, you'll see that the stock market hasn't really been doing that well. Um, in the last 6 months or so, especially after gold started going up, and even longer term, if you go back to 1999, 2000, the Dow Gold ratio has been in decline. So the other thing I think could be happening is that yeah, valuations don't matter right now because the market knows that if something wrong happens in the system, maybe regional banking problems that we saw last week, for example, that the Fed will step in and provide massive amounts of liquidity via QE or whatever other instruments they have. So yeah, it's almost like a melt up. It's almost like looking at countries like Zimbabwe, Venezuela, and Brazil when they had massive inflation. Their stock markets actually did really well, but eventually people realized that the currency that they those markets were valued at were becoming worthless. So that's how I see valuation for the U.S. stock market.
Hmm. And I also like to ask this question. So on one side, we have debt levels that are really, really high in US, and we have stock market valuations that could be, very rich. But on the other side, we have the monetary system, the governments who are willing to do absolutely everything they can to avoid deflation because those things are deflationary in a way. So what's your view on how this could play out? Will it be the government just continue print, print, print?
Yeah, I think by government, I guess you mean the central bank and the government together. We are led, of course, to believe that they're both that the central bank is independent, but I think that's a myth because when things get really critical, the central banks step in like they always do. I think they'll step in, and if things get really yeah, troublesome. They've done it in the past, and I think they'll continue to do it because politicians would rather have inflation than deflation, and they think they can control it, of course. But my fear is that eventually people are going to wake up and realize that inflation is a deliberate policy from the government and they will start turning away from the currency. And I think what's happening in gold and silver now is a symptom of that. More and more, not just central banks buying gold, but also very wealthy uh, individuals buying physical gold. I know we've had this big correction, but uh, I think that's all it is, a correction. So yeah, I see them doing whatever it takes. And if you look back at history, once you start down this road of printing money every time there's a problem, you don't stop until you can't anymore. And by that I mean until the currency just is basically wiped out.
Just a very quick break, guys. So I've spent the last 12 months creating this course, Wealth Building Blueprint. I've put an unbelievable amount of effort into it. I cover investing, trading, speculating, business. The course is perfect for people who are still relatively new to this wealth building process. And I also offer 3 days money back guarantee. No questions asked. If there's absolutely anything that you're not happy with, you will get your money back. There's also a private community where you can ask me any questions, you can talk between each other, you can share news and things like that. The link will be in the description. Right now the course is at a 70% discount, and let's continue with the video. And I don't think there are any exceptions to that. It happened absolutely every single time. So I would like to stay on the topic of gold and precious metals. If we could talk, Mario, about some of the drivers that are driving gold right now.
Yeah, I think After COVID, I know you want it right now, but I have to go back. Well, during COVID and after COVID, it was all the money printing and the fact that they paid everyone to stay at home. That drove consumer prices higher, and gold, of course, dipped in the beginning of 2020. It crashed like everything to like 1450, and then it ran up to 2000, and it stayed there for up until last year. But it also started going up in 2022 when you had the situation between Russia and Ukraine, and the EU, the West froze Russian assets. I think that was a trigger for the BRICS countries and other countries outside NATO and the West to accumulate gold because they realized that they're having fiat currency reserves in the Western financial system was very dangerous. So gold is a neutral asset that you can keep at home, and I think that's driven gold. And you will probably have seen that since 2022, we've had record net buying of gold by mostly Global South and BRICS, non-Western central banks. Yeah, the most since the post-war World War II period, and they're continuing to do it. And even the World Gold Council said that 75% of the central banks they surveyed say they're going to keep buying gold in the next 5 years. And now I think as well, the public is starting to slowly get involved. I think definitely the wealthier part of the public, the high net worth individuals, the top 1%, they're realizing that yeah, inflation is a policy, and that you need to have some gold. So I think those are the main drivers. Yeah, the public are just starting to get involved, but there's still a long way to go. I think, especially in the West, maybe in Asia, the public has more interest in gold.
Mhm. So that was actually my next question about public getting involved. I think if we look at Asia, they're much more involved than general investors in the West, and so it looks like there's still more room for demand from that side of the world as well. And Mario, so if we look at silver, what would be the reasons and the drivers for investors to get involved with the silver market?
Well, silver is slightly different than gold because it's not just a monetary metal. It's also an industrial metal. Uh, why get involved in silver? Well, I think first of all, if you hold a silver coin, it's really nice, and you can invest as well in numismatics, which is collector's coins, history. But also, silver has so many industrial uses, and I think India and China are using a lot of silver. And the fact that we're still around the price that it was in 1980. Recently, we broke above 50. We went to like 54. So while gold in 1980 was at 887, that was the high. Yeah, silver is still lagging, so there's still a lot of potential for silver. And I think recently as well, I saw that the central bank or the Saudi Monetary Authority, they bought some silver ETFs, the SLV. Some people will argue, well, that's paper, but seeing that they're a big financial institution, that they could take delivery of that. And I see that India as well is pushing silver, not just gold, as collateral for bank loans. They came out a couple of months ago with that. So it's becoming ever more important. And for China as well, it's really important. A lot of physical demand for silver. And yeah, I mean, you look the monetary part, you look back at history, or you look back at, or you look at, excuse me, at words like dollar. Well, that came from the Joachimsthaler, which was a silver coin. You look at in Spanish the word for money, plata, that's silver. So I think it's in the human psyche as well. And if silver continues to go higher, which I think it will wake up the public to it. It's kind of in our DNA. So that's the reason why I think, well, the other reason, Vladislav, is because gold is becoming less and less affordable, but silver is still only about $50, so it's still relatively cheap.
Yes, and this would be likely the reason why silver usually performs really good during the end of the bull markets, likely because gold is too expensive for most people to buy. So the way I sort of look at it, that until silver performs really, really well, likely the bull market has still room to go further in the precious metals sector. And so, Mario, um, what would be the reasons that would cause you to get out of this sector? So, how would you know if gold and silver are too overvalued and maybe it's time to trim the positions or to get out for a certain period of time?
Yeah, I mean, it could, I mean, recently I think it was overvalued last week, or beginning of, yeah, I think it was last Friday. I said the gold price has gone up so quickly that I've lost track of it. It went from 4,000 to 4,400 almost in a few days. So we have seen a correction. But just because it gets overvalued doesn't mean to say I'm gonna like get rid of my physical gold and silver. I might take a little bit of profit in the miners, but I think I look at gold and silver as insurance and also as savings. And I think there will be a time that you will want to, if you need to, exchange gold and silver for assets that you think are relatively cheap uh, to gold and silver. The other factor is confidence in the powers that be, in central banks and governments. As long as governments continue to borrow and spend as much as they do, as long as they continue to wage conflicts around the world, and conflicts and wars are very inflationary. As long as they push for that, we're seeing this in the EU. We're seeing the United States as well. Even though Trump says he's a peace president, he's trying to provoke countries like Venezuela, Iran, in my opinion. Uh, and as long as also central banks are always willing to save the day, um, yeah, I'm gonna hold on to my gold and silver. But if that changes, and that's highly unlikely, then maybe I'll think of taking my gold and investing. Maybe, well, even though, yeah, I don't see myself doing that, but investing in government bonds, but I don't really trust them. So that's how I see that. That's how I see that question that there.
Yes, and when deciding to rotate your money, let's say from gold into something more attractive, if that situation occurs, would it be the ratio charts that you will look at, comparing it to different assets to
Yeah,
decide?
yeah, no, that's right. I mean, one ratio that's really important is the Dow gold ratio. And if you look back like 100 years, in 1929, that ratio topped around 20. You needed 20 ounces for one Dow. And then it bottomed at 2 in 1932. So that was a good time to get out of your gold and get back into the stock market. And then from then on until 1966, that ratio increased again to 26, and then it dropped to 1 in 1980. That was a great time to get out of gold into financial or paper assets or the stock market. And yeah, 1999, 2000, that was the top of the Dow Gold ratio. After 1980, it was around 45. And now it's accelerating lower. Recently we're around 10. It must have gone back up a little bit because of gold going down. But I still think we're going to go to at least 1 to 1. And then I think it would be a good time to take some of your gold and exchange it for investments other than gold or miners. But I think that will take maybe 2 or 3 years still that for that ratio to go near one.
Yes, that makes sense. And you did mention the miners, Mario. So when I look at the miners, right now, I think the good companies, the big companies, they're printing cash. They're doing really, really well at the current commodity levels because when those mines were built, the estimates were usually like under $2,000 gold. So do you still see opportunities in the mining sector right now, even though the GDX, they performed really, really well recently?
Well, some people argue that the miners, even though they've gone up a lot, yeah, they corrected recently. They're despite that, some people argue that they're still undervalued because gold has gone up even more, and most analysts and investors they take the trailing average gold price. So they're still looking at gold as, 2.5, 3,000 instead of four. So I think we've got some earnings results coming out on the 23rd of October from Newmont, and I think that will be interesting to watch. So no, I don't think even though the GDX and GDXJ have gone up a lot, that uh, we're over in this bull market for miners. And eventually, I think. Next year people are going to realize that because they're going to see all the great earnings for the mining companies. And despite the fact that gold is, some people say it's in a bubble, I don't think it is, but it's gone up quite a lot. And silver, it's still under owned, like very few people and investors own gold. And so there's still a lot of room in that sense. I think the percentage of all investment assets in gold and what the mining sector in the US is around 1% or maybe even less. And apparently 39% of fund managers have no gold for their clients. So yeah.
Yes, and demand would need to double for us to get to the average of around 2% if you look historically as well. And I was talking to Rick Rule, Mario, recently, and he was saying that when he was doing analysis of Agnico Eagle, after the stock doubled and the gold went up as much as it did, the company right now is actually uh, cheaper than it was before it doubled at lower commodity price, which again shows that there's still a lot of opportunities in the mining sector. Of course, if you choose the right companies, because if you look at the whole sector with all the junior companies, that's pretty much money wasted machine. Um, so thanks for that, sir. I would also like to ask you about the commodity sector. Would there be any other commodities that you would be interested in, maybe like copper, uranium, or anything else?
No, I mean, I do cover them a bit, but it's not something I focus on. But I think commodities, even though they're underperforming gold, the general commodities, they will tend to do well in this period of monetary debasement. So, but I don't, I mean, uranium has done well in the past. And I think maybe countries are going to have to get back to like Germany. I think well, I don't know if they can get back. They're destroying all their nuclear reactors, which is amazing. But yeah, copper as well is. I think yeah, copper is near all-time highs, or it recently made an all-time high. It came back off. So, but yeah, I focus more on the monetary metals. Yeah, that's what I do. But I tend to think overall, tangible or hard assets are a relatively good place to be, especially when the monetary authorities and governments print so much money and credit out of thin air. You can't like create commodities out of thin air. So it's the simple law of supply and demand.
100%. And if I could get your view on the crypto sector, Bitcoin and things like that.
Well, I started looking at Bitcoin and crypto. Well, some people now say that Bitcoin is not crypto anymore, but in 2012, and I thought it was a good idea. I thought it was an alternative to our banking and financial system. And it made sense because we had the crisis of '08, and by then already I was into gold and silver. I'd been into gold and silver for 10 years. And I thought, oh, this is interesting. It's a grassroots thing. But over the years, I kind of, yeah, found some holes in the story. The first one is we don't really know who Satoshi Nakamoto is. And for me, that's a problem. And the other one I started noticing in 2017, Wall Street started getting involved in crypto. They started like options, I think, and on the CBOE, and also Goldman Sachs started buying exchanges. And now you look at it now, it's all become mainstream. It's become part of Wall Street. And yet it was supposed to be outside Wall Street. So I don't like it. I think, yeah, and people will call me, oh, you are a boomer, you are a dinosaur, but gold and silver have a track record. They're timeless. Bitcoin hasn't been around that long. We don't really know how it will react in the next crisis. So that's how I see it. I mean, I've done well from cryptos and altcoins in the past, but my focus, I wanted to focus on precious metals, so I had to decide. It's one or the other. Some people think you can do both, but I don't.
Mhm. Yes, and I don't really hear even now anyone around me talking about gold, never mind gold stocks. But I definitely hear people talking about the crypto sector, Bitcoin all the time for so many years right now. And it's so difficult to buy something when everyone is talking about it, especially when you have something that, as you have said, Mario, has a track record, but still people don't talk about it as much. So
Yeah, I agree. I mean, even my stockbroker now, well, not anymore, but a week or so ago, they kept trying to push me into cryptos, and it's something they never did because yeah, the crypto exchanges were separate from the main financial system, but I don't see them talking about gold or anything like that.
yes, and just to continue a little bit on Silver Mario, do you see we seen there's a possibility of a squeeze happening? What's your whole take on that? Do you believe there could be squeeze on silver?
Well, I think we're already seeing it in London in the LBMA. Yes, there's a shortage. Yeah, there isn't enough silver for all the paper claims that the bullion banks and others created. So, and I think the rest of the world, they want real physical silver. They don't just want to speculate on the price with paper. So yeah, it's definitely a possibility. We definitely squeezed recently up to like 54 in the spot price, and the spot price LBMA price has been higher than the futures price in New York. Yes, of course. Now we traded back below 50. I think we're just above 48 as we speak here. But I think that's just a retest of that massive resistance we've had since 1980. And I think eventually, yes, silver is going to fly. So there will be a big squeeze. We've had 5 years of production deficits in silver as well. So I think that's going to make things even more interesting.
Yes, and personally, I would be more happy to see gold and silver consolidate for a while to cool down a bit rather than go parabolic, because usually that's a bad sign. That's a sign that we are at the end of the bull market. So after a move like that, for me, I think it's healthier to see that consolidation. I know people are panicking, they're selling, oh, silver and gold are crashing, but to me, it looks like a healthy thing.
Yeah, I mean, I've been involved in gold and silver since 2002, and there's been many of these corrections. And yes, you get used to it. And it's one of the reasons so few people have gold is because uh, it seems like most of the financial commentators, economists, and the mainstream media, they're anti-gold. So they scare people off. But I mean, for your viewers, if they look at the gold chart and put it on a monthly basis or even quarterly basis, the correction we've had in the last few days doesn't even show up. So yeah, and like you said, markets also don't go up in a straight line. They don't go down in a straight line. They would all stop and consolidate a bit. The question is, how long is it going to consolidate until it starts going up again? I can't tell you, but I have a feeling it's getting faster and faster. It's not going to take the 4 months that it took earlier this year from April to August. For it could be a lot less.
Right, right. And so, Mario, I like to ask this question for the younger audience. So, if we have an individual who's still at the beginning of his or her wealth building path, they're still new to investing, but they do want to get involved. They have so many options now with the AI, with the crypto, with precious metals. Maybe they're hearing about them. So, what advice would you have for that person so that they don't make too many mistakes and don't get burned too much?
Well, there's only one thing. Do your homework, do your research. Don't just listen to other people and take their opinion and act upon it. Yeah, do your own homework. That's the only way to go. And if you think something makes sense, dip your toe in the water, and don't leverage. I think that's a bad idea, especially if you're young. You've got so much time. You don't have to leverage.
Thanks for that, Mario. So these are all the questions I had. Is there anything else that you would like to mention that maybe we haven't covered?
Um, well, maybe in terms of investing for young people, one thing I say a lot of times is that investing is not just investing in the stock market or in currencies or commodities or gold or silver. It's also investing in yourself, right? So yeah, spend time and money on yourself as well, on your health and your knowledge. I think that's also important.
Definitely. So, Mario, I really enjoyed our conversation. Thank you so much for your time, and I'd love to have you back on the show.
You're welcome, and thank you for having me on.